Yo, what's up guys? It's your boy Looney, and today I'm breaking down my actual weekly investing routine. And this is not some complicated trading system. It's just the simple, repeatable process I follow every single week to grow my account long term, no matter what the market is doing. Some weeks I make a lot of trades, and some weeks I make zero trades. And that's exactly how it's supposed to be. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are down below. And I also do want to mention Moomoo. I have a referral link, and if you click on it, you can get up to $1,000 in NVIDIA stock, as well as high yield on your idle cash, and it's 8.1% APY on your idle cash. Offer terms and conditions do apply, so check that down below. Let's get into it. So step one is automatic DCA. Every week, no questions asked. And DCA stands for dollar cost averaging. And this is the backbone of my routine because it's automatic. So every week I buy Bitcoin, Ethereum, and long-term stocks like Robinhood. And this is one part of my routine that never changes. I don't overthink it. I don't check the market if it's red or green. I don't try to wait for the perfect entry. Because the truth is, your consistency matters more than your timing. And this is what protects me from my emotions and keeps me building even when things look ugly. Now, I will change up the amounts when I'm doing this dollar cost average, but I keep it automatic. So, for example, Hood, I increased it from $2 and now $4 a day. And this way I could build my position, and long term, I'll be fine with holding this stock and gaining this in my portfolio. Same with Bitcoin and crypto. Bitcoin, I put around $4 a day as well. And same sort of idea. I'm not too concerned day to day. I don't really care if Bitcoin goes to 60K or if it goes to 150K, because I'm simply buying it every day, just building up that position. And this is a long-term play, so I'm not concerned day to day. Now, what do I change? Because that's something I don't change, and I just keep it going automatic. I will change what I choose to do it with. But overall, I'm not overcomplicating it. I'm not making major moves when it comes to dollar cost averaging. Now, step two with my routine is that I'll hold cash. I'll hold cash for when fear spikes. Because this part of my routine is keeping cash on the sidelines. Not because I'm trying to time the market, not because I'm predicting crashes, but because fear does create opportunity, especially for an investor like myself for option selling. Now, I'm not only option selling, I will buy shares upright with some cash, but most of the time, this dry powder or this buying power is used for options. You can see here, I have 8,700 in cash, and then of that, I'm using more. I'm using 11,200 in options collateral. The reason for that is because I have margin enabled. I'm not using margin just yet, but if I do get assigned on all these options, I will have to use margin around that $3,000 of margin. Now, again, I'm using it mostly in options, but I do buy shares. I'll buy shares of HIMS, I'll buy shares of Hood or Amazon, something like those, something that I see for long term, and just I see a good opportunity. So every week I am checking the fear. I'm looking at the fear and greed index. You could look at it on CNN. You can't see it on Robinhood, the app, but you can go outsource it through just research and you'll find it. And it's a pretty good indicator for where we are with fear. Right now we are sitting at the high range of extreme fear, which is pretty interesting. I don't know how accurate it truly is, but it is a good way to look at it to see where the market sentiment is and how you should be positioned. Now, another thing I like looking at is the VIX, and I have it pulled up right now, and you can see here, the VIX is pretty low now. I mean, the VIX generally trades between $18, so when it's below that, it's saying that there's not a lot of fear, And then when it's above that, that's showing when there's a lot of fear in the market. And we could see earlier this month, it went up to around 27. And that was telling me that there was fear in the market. There was opportunity. So I sold puts. I sold puts on Mara and other stocks. And you don't have to choose the same stocks as I do when doing these strategies. But I am being invested. I'm actively investing when there's fear, when there's opportunity. If we go back to April, the fear spiked a significant amount up to 52. And we could see that that was a good buying opportunity. Now, again, even though there's not really a limit to VIX, usually above 25 is when there's a lot of fear and you can see some good opportunity. You can't time it perfect. And that's exactly what I was trying to do. I wasn't trying to time the perfect top or the perfect fear when fear was at its maximum height. Instead, I just saw fear rising and I opened up some trades. I didn't go all in. I did just sell puts. And if it continued to go upwards past 30, I would probably go even more aggressive. So I like looking at the VIX. It's not everything, but it is a good indicator when choosing when to be invested or when to just sit on the sidelines. So a day like today, I didn't make too many trades. I did open up a covered call because one of my stocks did run up a lot, and I am looking at other indicators as well on the stock side. And also fear and greed index, I'm looking at that as well. So I'm being conservative when I'm choosing what to trade, when to trade. I am looking at some technical indicators, but it's not all you need to be looking at. I don't want to overcomplicate this video and this tutorial because really you don't need to be looking at all that. As long as you're just investing when fear is high, it doesn't matter too much on what your strategy or what you're actually doing. Now, when I say that, I'm also saying don't choose penny stocks or don't do zero DTE option trading or day trading. That is obviously a lot more risky. But what I am saying, if you're investing in good quality stocks when there's fear, then usually that is a good opportunity. So if the premiums aren't good, when there's not a lot of fear, I'm not forcing it. I'm not forcing trades. And that's the unfortunate side of investing. You want to invest when things are not good. So for example, if we go to Mara, or let's go to Webull because Webull was struggling this past week and this past month, we could see here I'm actually up now. But in the past month, it was down 16%. So when there was a lot of fear past week, around this $8 mark where it kind of looked like it was just going down forever, I sold puts. I sold puts at $9, at $7, and you can see I'm not trying to time it. I'm just simply trying to invest. And now my $9 is actually out of the money, meaning I'm not going to get assigned. And I am making money on the other end with covered calls, but you can see I'm not forcing it. A day like today is a day I wouldn't trade. I mean, Webull on the day is pretty flat, slightly negative, but on the week it is up 10%. So that is worth noting. And I would just rather do nothing than force a bad trade. And this is where patience actually protects me. Now, step 3, I did just kind of talk about that. And I don't know if this is more advanced, but I am being a lot more strategic with this because I did get burned earlier this year, and that is selling covered calls on strength. Because green days, you can actually have opportunity, or you can capitalize on opportunity as well. When my stocks run or sentiment gets overly bullish or overbought levels, that's when I'll sell covered calls. This gives me steady income. I have some downside protection, and it's a way to profit even when the stock kind of goes nowhere. So we could look at something like Riot. Riot today went up around 8% or 7.8%, which is a pretty high increase. It is a very volatile stock. So what did I do today? I opened up a covered call. And I opened up a 26 covered call, and this one's really out of the money. I didn't make a lot of money. I only made $8, so it's not a crazy trade, but I do have other covered calls, so that's why I was a lot more safer. So if we look here, I have an $18 covered call and a $20 covered call. And the reason I went safe is because I want to roll these positions, or I want to keep these shares. So what happens is if the stock runs past your strike price, you're in a tough situation where you have to choose whether you want to roll it, whether you want to close the covered call for a loss, or you just let your shares go and you're forced to sell your shares. So I already have a bunch of covered calls that are pretty close to the money, and this is a volatile stock, so it is likely, or it is possible, that Riot does go to $18 or $20, and that's where a lot more management has to be. So instead of adding even more stress or management, I did a covered call that was really high. And if Riot does go to $26, that's a pretty crazy jump. If we just look at the stimulated returns, which is a good feature that Robinhood has, and this is about a month out. So if it went to 26, I'm just trying to get that number. That would be around a 60% increase, which is a pretty insane move in just 1 month. And I wouldn't mind maybe taking some shares off the table. And I'm sure we would kind of loop into the greed part and VIX would be super low. So it kind of all goes hand in hand with one another. So I don't try to overcomplicate these things when it really comes down to it. Now, step 4 is just a review. I'm always reviewing my positions and I'm not micromanaging. Once a week, I do look at my portfolio. I look if I'm overexposed to a sector. Did a stock run up too much or any puts close to assignment, any calls I should roll or close early. But the important part here is I'm not reacting emotionally to the daily price swings. Most of the time, day-to-day movement is just simply noise. This review is just to stay aware, not to panic, seeing if my share is going to get called away, if I'm going to get assignment, because once I get assigned, I can sell covered calls. Now, another thing I'll do with covered calls is I'll use some of that money to reinvest. So Webull, once again, I have 201 shares, and that's because I used some of the premium from the covered call and I just put it into Webull. And again, I wasn't looking where Webull was or whether it was a good day or bad day. I just saw that my cost basis was above the current price. So I wanted to get it down and I bought shares for a lower price and I got my average cost down. Now it's only one share, but I'll continue to do this. If I'm negative and I'm running covered calls, I'll reinvest those. And also a good part of that is if the stock does run hot and it does go to your covered call, you're able to actually capitalize on that run up. And it's not a crazy amount, but you don't miss out as much on that opportunity cost if you were to just not rebuy the shares and just kind of keep the shares you have. But I'm not doing anything emotional, or at least not trying to. I mean, obviously emotions are involved. It's something you can't help. But ideally, I am looking at the numbers, and if the numbers aren't lying, then I won't make a trade or I will make a trade. So when it comes down to it, day to day isn't too much of a concern to me. A lot of the news and just the overall sentiment is just noise for the short term. Now, step 5 is pretty interesting, and that is accept that every week is different. And this is the part that no one wants to hear. Because some weeks I make a bunch of trades and some weeks I make zero. Some weeks I make a ton, I'm up 16%, and some weeks I'm down. This week I'm up pretty significant. I'm up around 8,600 or 16%, which is a really good week. Now, I know that next week it could be really bad or really good. It's just what it is. It's volatility, and that's what happens when you invest. And that's why you also want to be choosing the stocks that you're comfortable owning. Like, for example, I know Riot's really volatile, so these price swings are common for me. I'm sort of used to these price swings. So the key lesson here is that if volatility is high, where the VIX is high, premiums are juicy, and that's where selling puts is really optimal. And if my stocks rip, then I'll sell covered calls. If the market is calm and nothing looks good, I simply just sit on my hands. So you can see every week is just sort of different. This week, I kind of did nothing. I really just managed my open positions. I opened up all my cash secured puts last week. So this week, I didn't have to do anything. I didn't have to open up any trades. Maybe I opened up a few covered calls, but overall didn't make too many moves. Whereas last week or the week before, I was selling a ton of different puts. For example, Mara. This stock is getting a lot of bad FUD, so it is a risky stock, but you can see how many puts I have invested. And a lot of these were done the past few weeks, and I put around 5,500, even opened up a leap call, but this week, not too many trades. I'm simply just holding what I got. I think I might have opened one covered call earlier this week, if I'm not mistaken. I don't know if it was this week or the week before, to be honest, but again, I'm not forcing trades. I'm not going on emotions. So the routine isn't about forcing these trades. It guides opportunities. So that's why it's worked. It has worked. It's patient. Now, my final thoughts, once again, is the routine is simple. DCA every week, every day. I hold cash for fear. I sell puts when volatility spikes, or even buying shares outright or buying leaps. or just being invested when volatility spikes. Then I'll sell covered calls on strength, maybe take some profits, who knows, but overall, I'm long-term focused. Markets can go up, they can go down, they can go sideways. It doesn't matter. The routine stays the same. If you found this video helpful, drop a like and comment what your weekly routine is. Subscribe for more. Until next time, peace.